Hey guys, welcome back. American Coin and Currency Tokenization at Scale, building institutional grade RWA infrastructure. Today's special guest, we have Edwin Mata, CEO, co-founder of Brickken, Forbes Business Council member. How's it going, Edwin?
Hey, Dustin, how are you? Thank you very much for having me. Pleasure here. Also, hi, John, how are you?
Hey, John.
Hello, Edwin. How are you today?
Very good. Thank you. Excited to be here so we can talk about tokenization and what's happening in the space, right?
Fantastic. Yeah, it's always interesting
Absolutely.
to have
Exciting space.
uh, you know leaders such as yourself in the space come and join us. We've had various other leaders in the space as well, covering topics around tokenization, real estate, precious metals, assets, commodities. So, kind of covering all the topics here. But yeah, let's touch a little bit before we go into the introduction about what's going on the markets, because that's always interesting. um, Crazy pullback here, especially on precious metals. Of course, Bitcoin hit its 84,000. I feel like Bitcoin is still going to reach around $20,000 to $30,000 by the end of October, but that is, of course, according to Reddit. so, so we'll see. We'll see what happens.
Hold on,
yeah.
Dustin. Did you just say you think it's going to 30 to 40,000?
I mean, there is a little bit indication that that is a possibility, just because we hit on October 6th was the top of the market, which is exactly the amount of days from the previous cycle from the bottom, which is 1,045 days, I believe. I could be wrong, but where's the cycle? 1,064 days, which is pretty common for that same cycle. There's shorter cycles, but that same amount of days has been pretty much set in stone. And I feel like that could be the case, but of course, the market on the Bitcoin rainbow chart, which I think I have it here, um, is at the bottom of the chart. So, I mean, it still can dip below, which was in 2023. That's when the market came back after the 2022, the December. So, it is possible. And this correction kind of follows like all the narratives, NFTs, and all that altcoins. So, and you can still see some of, like, I guess, GameFi, like play to earn, we're kind of decoupling with Bitcoin against Bitcoin prices. So, I mean, I think there's a possibility that the market is correcting for Bitcoin, but where altcoins could see its final, I guess, nail in the coffin before the market recorrects, or goes back to the same, back to the cycle, 4-year cycle, or in this case, I think it's 2 and then 3 or 4. Yeah. That's how Bitcoin usually moves, but we didn't see anything too crazy. Ethereum did. I don't have the chart here, but the dominance did come up from, I think, 7%, and it was at 11. Which then it pushed it up to almost 5K here last year. So, yeah, I don't know. Nothing too crazy, but I know XMR hit a crazy all-time high, 800, and then, but yeah, getting back in the precious metals before we get into the intro here, 55, almost 5,600, and silver hit 21. Yeah, 21.
Yeah, 120, 120 this morning. What's crazy, guys, is that yesterday the run up in gold, the valuation in that run up was worth more than the entire market cap of Bitcoin.
Yeah, that's what we were talking about earlier with Edwin.
Oh, okay.
Exactly.
It was like a drop in the bucket for Bitcoin in comparison to gold with the 2 trillion. I mean, that's the whole market cap of Bitcoin. So, we're definitely early when it comes to digital assets in comparison to traditional markets, which people in the last 2 years now have realized it in comparison to previous crypto cycles. So,
I tend to agree with you, Dustin, that we're going to see a big pullback. I think that's it's
healthy.
it's almost like written in stone at this point. And
Yeah.
maybe who knows? That's what's fun. You don't know, but just common sense. I think that you're going to see a big pullback, and you're going to get a lot of people that are going to sell out of their positions. People that got in the last 6 months or so, and
Right.
once like you said, we have to have consolidation in the crypto market with all these
That's
tokens. We don't need 99.5% of the tokens, maybe more, that are out there right now. So once that happens eventually, and you only have a few left standing, then we'll see a huge run up, I think, in my personal opinion.
Yeah,
I
for
agree.
sure.
A little cleanse always benefits because I saw in CoinMarketCap an article that more than 10 million tokens died in 2025. Like,
Yikes.
yeah, and that's probably what they measure. They don't measure in all the rest of
Uh,
craziness, pump fun stuff, right? So 10 million
Yeah.
tokens, that's ridiculous.
Yeah. So what I'm looking out for now, guys, is before we start our show, is just I'm looking at the dollar, man. And whatever happens with the
yeah.
dollar is kind of like the telltale. I have a feeling that they're and this is not my idea. I saw this on the online, but the explanation made a lot of sense to me. The devaluation of the U.S. dollar, and apparently it was done in 1985 as well because the dollar was so strong. And so a weak dollar is, we've always been told, oh, we need a strong dollar, strong dollar, strong dollar. But behind closed doors, the powers that be don't really want a strong dollar because, especially with what Trump is trying to do, or that administration, I should say, with um, bringing manufacturing back here, getting exports out of this country into other countries. A strong dollar makes those exports very expensive, makes imports less expensive. So I think that they're purposely trying to push the dollar down. It's done. It's been done before, so it's not like this is
Right.
a new thing. In 1985, it was they crashed the dollar by 50%.
Oof.
So what that does is it makes our exports more affordable, imports more expensive, but they can also, if they choose to do so, pay back debt in in the, the debt is not as formidable with a weaker dollar because they can then pay down the debt. Not that they're ever going to do that because it doesn't make sense to pay down the debt, but I guess maybe just for show and appearances, window dressing. Maybe they'll pay down some of the debt because once it gets
Maybe.
to 40 trillion, what are we running $1 trillion deficit every 100 days now?
Oh,
40% of global,
yikes.
what I like, people say it's money, but it's liquidity. It's not money, but 40% of global money / liquidity has been created since 2021. Let that sink in. 40% since 2021, man. That's crazy. That's why things are so expensive and not slowing down. So I've been preaching it for a while, and this will be a great show about it. But having physical assets, having real estate, having tokenized products, having rare
Right.
coins, having bullion, having rare art, having anything that's valuable that you can have possession of, to me is it makes
Yeah,
sense.
I agree.
I agree.
Yeah, let's get into it, guys. So I'm Dustin Lee, host in social media at American Coin. We have John Beatty, CEO, founder of American Coin and Currency, and we have Edwin Mata, CEO, founder of Brickken. Oh wait, that's a question. Here, let's bring your info. Edwin Mata, CEO, founder of Brickken. Little intro about Edwin here. This global fintech leader in real-world asset tokenization with a background in M&A law and technology. Edwin was positioned at Brickken as a forefront of compliant institutional-grade tokenization infrastructure. Brickken enables financial institutions, asset managers, and regulated entities to tokenize equity, debt, and revenue-sharing models using a robust SaaS platform operating across 164 countries with over 450 million in tokenized assets. Brickken is helping define how traditional finance integrates with blockchain responsibly, transparently, and at scale. That's awesome. Yeah, I love that. So yeah, let's get into Edwin. So what was your kind of transitional moment for yourself when you kind of focused on I guess blockchain and how that uh, kind of moved to RWAs and tokenization.
Yeah, so 2018, I started exploring blockchain. The company that I was working as a general counsel, they got a, sub, a subsidy from the EU to study blockchain and applications in smart contracts and legality. So I was running that project, and that's basically when I stumbled upon blockchain itself. So I was really trying to understand what it was because I really didn't understand. Yeah, I heard Bitcoin before or Ethereum, but that was kind of like just the token, right? Just the coin or the value or whatever we want to call it. So 2018, I started really studying, and I got captured. I really like it because for me, since the beginning, it was the transaction of value that was very powerful. Kind of like I was seeing how slow like current things are, or how like from a lawyer perspective, you always have to prove and validate and make sure nobody cheats. So I was kind of like arranging that thought, which landed in tokenization. Kind of like, okay, so what is tokenization? Which is basically you can represent any kind of form, value, store, real, unreal, digital, non-digital, and then what matters is how easy it is for you to move that value between parties, and kind of like all this modeling about behind the store of value and how that it transacts, the ledger. So all of this started adding up in my head in 2020. Created Brickken, basically. So yeah, 6 years ago, which is already a lifetime. In crypto, that's like 1 century. I'm 1 century old. In,
It's been a long time.
like almost 3 cycles I survived. Like
That's
that's it.
crazy. Wow, it has been that long. So yeah, so why so you mentioned about Bitcoin getting into like digital assets in general. So like the thought of Bricken was tokenizing these assets, finding a way to like make it more tangible. Like what was kind of like your thoughts, like how Bricken started, like and why tokenization?
Yeah, so it was always about like capturing money, right? I mean, money
Right.
is we think it is expensive. Okay, we used to the concept of money, but capturing kind of like getting money, like you're very limited on your friends, on your table, or your neighborhood, your country. Kind of like we never thought about kind of like capturing worldwide money, right? The only thing you have that is like IPOs, basically. But
Okay.
even IPOs now they're more open. But like 10 years ago, you couldn't buy an IPO of the United States because we didn't have all these international brokers. So
Mhm.
everything kind of like was very compartmentalized. And basically through
Okay.
blockchain, I saw the movement of capital, which is kind of like, oh shit, the people buying Bitcoin worldwide, same time, through the same systems, transcripts. So I was like, okay, this kind of like maybe why don't you format the ICO into
Right.
for assets? So I started studying ICOs, the Ethereum one, um, Enos, which I don't think exists anymore. They people the name, which kind of like raised 2 billion on an ICO. And I was like, that's crazy. EOS, that was it. So I started studying the ICOs, and I was like, why don't you just create ICOs for assets? That was like the main thought, because it's crazy how through a website you can capture all of this amount of value, uh, real time, 24/7. And I was like, if I have something that I want to raise capital, I want to have that opportunity to have that door or opportunities at all times. Because even me as a startup, like this is my second startup, you go to a VC, you're there, but you have to negotiate face to face. I don't have the arm to say like, I open the door, whoever trusts me, jump in. So tokenization for me was always kind of like the IPO of things.
Okay. Interesting. Yeah, I mean that makes sense. I mean it's like ICOs kind of came and had their little boom and bust for a while in the 2018. Um, but it did show that there is interest in a way that makes it so there's the accessibility for more retail interest. And like you mentioned,
Absolutely.
yeah, like
That's a key denominator. Retail is not, it's not that they're not invited or they don't have access. I mean, it's just harder. You have to look
yeah,
more. But I mean, retail is still can amass capital, right? I mean, and basically you want to have a little bit of everything, don't belong just to one entity. So if you can diversify your risk or your allocators, it's also healthy for the projects because you're not owned by one single entity, so you have a little bit of everything. And that compartmentalization is also healthy because in reality, like usually happens with, I'm gonna say this because the startups, like you have this lead investor who sometimes controls or they don't care, but they have so much equity that just
Yeah.
like that's it. It's just your vision pivoted or anything. So risk, it's just a dilution of risk. I mean, it's prudent not to be owned by a single entity.
Yeah, it makes a lot of sense. Yeah, I've had that in the previous startup. Was our main investor was just kind of behind the scenes. They weren't as active, um, and having them interested in trying to build this out. They only care about the token allocation or equity. I mean, because they have a major portion, it's like they don't need to care. Where
Yeah,
you know other investors or smaller investors, they might be a little bit more interested in actually building and scaling the project, um, and also the community. And that's the biggest thing is when investing, when it comes to cryptocurrency, at least in that sense, I've seen is the communities, essentially the investors, and they have the same like-minded reason to build out the project, um,
absolutely.
more so than a lead investor. Um, so yeah, that's a good way to like be able to democratize the accessibility and kind of share of the token
I
allocation.
I have a really cool story about that because kind of like we always think kind of like the VC is like the opener, right? It's like, oh, that guy's
Yeah,
gonna open the doors because they sit in the back with the big doors. But
yeah,
then funny thing is that we forget that the VC gets invested by individuals. We call it high
yeah,
net worth individuals or
exactly.
a
Yeah.
syndicate of friends. So there are actually people behind this kind of like, oh yeah, because it happened to me at the beginning. I was like, oh, the BC, and then there's like
Right,
you guys are invested by some guys that are probably looking like me, kind of like you
right.
demystify this. But the story goes in that then we had the BKN token, so we have a lot of community, positive, okay, we like it. Some deals, some business have happened through us, but this is a funny story. And that kind of like pivoted is like, oh, we need to think about this completely different. We
Right.
had a we deal now with a bank that we are gonna do some very nice things. And the idea is that I met the person who I never met in life. So he texted me, he's like, hey, I know you're gonna come here. When we meet, I would like to take you out for lunch. And I was like skeptical because it's also like we just like, okay, but you have the token holder, we have chatted. It's like, okay, yeah, pretty cool. Yeah, let's meet. Then I stumbled upon the director of a bank. And I was like, I looked at him, he was like, you're the director? And he's like, yeah, so I do this for the bank. I'm the head of digital assets. We want to do all of these things. I've been studying tokenization through you, and we like it, and we want to approach and do a proof of concept. And I was like, this is madness. And that shows the opportunity that we don't know, like who's holding a value that you created, and communities can be thousands or millions of opportunities, right? So showcases that maybe we have to pivot a bit and say like, oh no, we don't like the retail. Well, I think retail is your first cheerleader, and
Yeah,
maybe they're gonna cheer more for you. Talking about when the sentiment, because right now could be a little bit more weird, but I mean, look at all the Apple fans, users, investors, everybody's like Steve Jobs is like, oh, we will do anything for that guy. This guy,
right.
we have to think a little bit how what happens there.
Yeah, it's like definitely Steve Jobs paved the path, but like Tim Cook is like trying to hold it together, I guess.
That's a different conversation.
Like
That's a different
we
podcast,
just live the legacy. It's like, okay, we'll come out with the next iPhone 20.
It's like
Um,
same as the 10, like nothing
yeah,
changed.
I see the things like the iPhone 3GS was better, like when it came to functionality, than it is the newer iPhones. Like they're like, and it said one of the developers were like, we can't recreate that. Like it was like in Steve
Wow.
Jobs times when that was developed. Like it was very functional. I seen it. I was like, I didn't become an iPhone user till later on. Um, so it's like, but yeah, you mentioned about like community, like I go to conferences and whatnot, and I meet a lot of interesting people that one developing infrastructure. And I met Gavin Wood, who developed Ethereum, and yeah, he worked on Polkadot. So like and those people, they're all like really smart developer type people, which then bring in, investors as well. VCs like to hang out with like, strong developers. So it's like, yeah, it's good. It's good to have like an understanding where the funding is going, and of course when it comes to community or retail, that signal is important, and that's a huge perspective. Is like,
Absolutely.
uh, you know, retail is going to signal, and then institutional interests and whatnot, they're going to come in. Tokenization, like in general, has been kind of off and on when it came to retail,
Oof.
but it's still being developed regardless. And a lot of the players, obviously recently signaled BlackRock, Coinbase. Um, they're obviously full steam ahead. But yeah, when it comes to like I guess more of the legal parameters, like what are some of the hurdles you have come around? You have the M&A background, so you've seen like how that early adoption for tokenization has been.
Oh, man, this is the perfect question because yesterday the sex issued like a guideline, right? An acknowledgement of what is tokenization, which literally invented anything. And what I'm trying to say here is, what was the biggest hurdle? Ignorance. Because a
Yeah,
lot of people thought about tokenization being kind of like, oh, it's a new thing, or oh, like literally, people forget that securities back in the day was a certificate that was handwritten, well, handwritten, and you kept it maybe in a vault in the bank, but it was a piece of paper. And when it
yeah,
pivoted into this online, it didn't switch. It just became an online representation in a ledger. Security, security. But I don't know why people, when they started with tokenization, they thought something new happened. And it was no, instead of having the piece of paper that became an annotation in a ledger, now became a token. But the security was always a security. So for years, even that happened to me, we had to stumble upon educating the market and telling them, no, there's already a legality because people would say, like, no, tokenization is not legal. Based on what? Because it's a security, it's been issued. If you issue according to the law, securities law in a specific country, still
Mhm.
a security. So the source does not mutate because of technology, and this is something that happens not only in this sector, like a lot. It's like sometimes you just pop new technology and it's like, oh no, that's illegal. And it's like, no, it's the same source, the same issue, the same thing. Now you're just using a different container. So during years, we have to stumble upon and very. I've talked to prime lawyers in a lot of places, and I have thought a lot about this. So yesterday, when the set came out, I read the piece of paper. I was laughing because literally it said a security. The organization is still a security. That's the whole thing it says. Like there's a bunch of words, but it was like this is what we've been saying. So what's been the biggest hurdle actually is just that some people started inventing things. Oh, you can only tokenize via NFTs. It's like NFTs is a technology. It doesn't matter.
Right.
So now with the big players, people that and there was a two problems, and I'm gonna be a little bit blunt here. There were the so-called blockchain lawyers, and
Oh,
there's no such thing as a blockchain lawyer. Either you're a corporate lawyer, a market lawyer, a
right.
parent, like you come from the same source, but you're adapting technology. But these blockchain lawyers that came out of nowhere for like, oh, now blockchain is cool. I'm going to charge 100K the
Yeah.
hour. They started flooding information that was so bad that it started stumbling upon Google blog posts saying, "Oh, we don't have regulation for tokenization." And it's like, who said? Then I went to look the profile, started reading, and it's like, dude, that guy had no knowledge in capital markets. He never worked in securities. How is it possible that he's saying something because he's never performed an IPO, he's never broken in? Like, so fundamentally, we had a huge problem during years, and now with the BlackRock, with everybody jumping in, the
Right.
capital markets lawyers jumped in, and all this knowledge from Web 2 went to Web 3. And they said, like, tokenization was always viable. What are you guys saying that it was not? So now we are being educated correctly.
Yeah, that's huge. Yeah, I've always been a proponent for education when it came to digital assets, crypto, Bitcoin, whatnot. Um, there's such a missing link. I mean, now it's more prevalent, but there was such a missing link a long time, and that was, of course, a kind of a way for people to actually get involved early. You know, of course, the early adopters were benefiting from that lack of education, and that missing link. But now it's like, it's becoming a traditional market itself. You know, it's a multi-trillion market cap, and that's fragmented with the NFTs. Those assets are not even included into the market cap. There's a lot of
Yeah.
liquidity there, um, and the knowledge that we have on what NFTs can be used for product based information rather than in metadata rather than just a picture that's stagnant. I've so we are wanting to utilize I don't have the ERC on top, but it's a vaulting process for ERC for tokenization that allows for proper custodialship for
Mhm.
products. So then, if there was some type of banking crisis, the vaulting, has to be, some mitigation when it comes to redeeming the products. So I think something like that is important when it comes to tokenization. Um, we want to have decentralization, but trust minimized is the best case scenario for traditional markets. There has to be some type of mitigation. Of course, the idea of decentralization is important, but there's a lot of like you know convolution with DAO infrastructure, decision making, tokens, staking and whatnot, those weighted systems. So those to me are kind of future case. It can be like a council that fast tracks decisions and whatnot. But that's why I love blockchain for the tangibility. We I previously used it for um, digital assets that are more retail based. Just the idea of like bringing some physical asset on chain with metadata, with the product based information, videos, manuals, pictures. Worked with Sony for a physical speaker to create a product based information attached to the speaker, scan with QR codes. Working with Lava Labs, which is they use it for like Shell oil, like in Hey Dude and Targus for their what's it called, DPPs, which is essentially like source to end of life products. But yeah, it's a whole another thing. But I love the tokenization and being able to like find abilities to like um, you know make assets more tangible, and that's the whole reason why I feel blockchain exists. But yeah, we've been scrutinized in the last 10 years or so about what crypto is and blockchain and how it's
Absolutely.
becoming, eroded in comparison to like traditional markets. But I feel like now there's a it is definitely in sync, but there is some decoupling still. um, but yeah, when it comes to where you're at with Brickken, so what does that look like for you? Like, how are you kind of placed in this kind of market? Are you, trying to, it's a product market fit when it comes to like tokenization. I know you're becoming more, the leader in the space when it comes to Brickken. Um, what do you see yourself like? Maybe in the competitor sense, when it comes to like chains, why is your project a standalone, product rather than, a chain, per se?
Yeah. So this is quite curious, especially the last connotation you said, right? Because our product is destined for Web 2. Or one of the things that we've been really working very hard is on user experience. A lot of us come from Web 2, even founders,
Mhm.
or I think out of the 41 we are in the company, only one is native Web 3 or super in Web 3 or two. The rest we always capture from the other side. So when they come in, they really don't care about how it is made. They just want it to work, to be used, to be easy, and to be accessible.
Yeah.
So when we in the back in the 2020, 21, 22, when we start, because we did a pivot, so let's say 2022, we focus on trying to abstract the chain, the wallets. The technology was not there. Uh, it was very rudimentary. So people were talking about wallets with on our Google's like a Google sign in. It was not developed. Now it is MPC wallets, but there was not interoperability between chains. Was like breach. It was horrible. A lot of scams, a lot of money lost in breaches. So not even security wise. And I'm telling you all of these things because when you say like, oh, how do you difference between the chains? Like Web2 people, our clients, understood the application and they didn't care what was in the bottom. For them, it was super painful to understand that they needed to have a self-custody wallet called MetaMask and sign throughout we didn't understand, or have to buy stable coins very early days and whatnot. So the funny thing is that in the Web3, they didn't like the application back then. They were focused on, oh, you need to be a protocol. And it's like protocol is used by Web3 people who have a wallet and don't understand the bolts and all of these things. But us, who we are trying to bring the rest, we are building an application. So it was always more famous back in the day to have like this super technological thing, a chain, or some swapping or some blend. Like in Web3, that was what was looked for,
Uh-huh.
but that didn't bring the Web2.
Right.
And us, we were working very hard on bringing the Web2 and hiding on the technology, which didn't help us explode until like last year when people were like, oh, we need more applications. And I was like, yeah, because that's how you onboard people, not with the whole technical functionalities, which is hard to use. Use it with a click, 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 done, I'm out. That's how you onboard people.
Yeah.
So our go-to market, as always, you know what's my best selling channel? Google Ads. People that's like people ask me, it's like, oh, so you guys where to get them in Twitter? It's like, no, the token works for Twitter. For my clients, I'm on LinkedIn. Like I'm a board up suit kind of like and Google Ads and LinkedIn ads. And that's where I get my clients and writing on blog posts and doing all of these things typical way. So I don't have any Web3 clients at all actually. Well, just maybe one or two, but that's a different story.
Wow. Yeah. I'm glad you mentioned about account abstraction. And I always forget to mention that. But yeah, that's exactly. It's that kind of mindset where people thought originally Web3 was going to just take over Web2. But the mentality is that Web2 already works. We need to bring on and onboard everyone from Web2 into Web3 using the technology, but abstracting all the technical jargon, attached to the chains and tokens and all that. Like I always want to think of like having a coin, or some type of in app asset, some type of way to abstract like the cryptocurrency aspects, like separating blockchain from crypto. That's always been like an idea for me is like the payment rails are important, but the blockchain use case is the most value. That is the value of the use case. But we don't need everyone to know that the blockchain works this way. It's the same as like a computer. We don't need them to know the RAM is going to be this megahertz and it's DDR5. Okay,
Absolutely.
you know
Absolutely.
um,
I mean, I think 90% of the users of computers don't even know how it works.
no,
Like I said, they just buy on Best Buy the cheapest one on an offer, and they're like, "Oh yeah, I have a computer. That's it." And then that's it. It's like they don't care. Nobody
it
cares.
works out the box. That's why the operating system is not Linux. So, like I mean, just like Linux is
Right.
put on there, and they're like, okay, now I have to use terminal, and I'm like,
Yeah. What is that? It's like okay, I'm lost.
I'm dead. So, John, do you have any take on the things? What's going on with you?
I'll tell you, we've been as busy as can be lately, and there's no sign of it slowing down. But as far as the tokenization sign of it, I mean, we've talked about this many times. It's not happening as fast, I think, as some people were anticipating, but it is happening.
Yeah,
And I would rather things happen slowly than really
yeah,
quickly, and then huge mistakes be made, and then have to go back. And so ramping up slowly is great. Excuse me. The precious metals market is I don't even have words for it anymore. I started thinking the other day. I was having this conversation with some of my coworkers, And we're always talking about history because coins in history, are like this. And so I started bringing up, let's play out this scenario where just like in 1933, they made people turn in their gold,
Mhm.
and they set the price. So people always say, well, that things can't happen again. Nothing, that would never happen again. And I agree. I mean, the chances of, like, let's say the U.S. government coming out and saying, silver is such a strategic metal that it falls under national security. So now we need to confiscate silver. We're just going back and forth with all this, but like for me, it's like, okay, let's say that did happen. Um, who's gonna be in charge of getting all that silver from the public? But even aside from that, um, let's continue down this thought experiment where silver, and let's just use silver this time, they set a price. You can't buy it in the open market anymore, and it is what it is. My mind goes to, so now you have all these huge bullion dealers that are out there that are going to not be able to do business like they used to. So now they're going to go, as much as they're going to have to scale down massively and then get into the
Yeah.
rare coin market. So then what happens with rare coins and other high-end collectibles like that, rare notes? Well, if all this money goes out of this market and into this market, well, prices are going to accelerate rapidly
Mhm.
on the upside. I don't see that happening, but it's just fun to kind of have those thought experiments on what could possibly happen. Because I'm telling you, guys, we are in a wild time. I mean, for precious metals to be acting like not even, forget about tech stocks, like penny stocks, up 10%, down 7, back up.
Yeah.
That's not normal, man. I mean, this is screaming at people that there is an underlying issue, and we don't know what that issue is yet. But if there's, I don't know much else that I could tell you other than, it's a fantastic time to be in this business. I love it. I wish metals would come down a little bit actually in price. I don't like it that they've run up so fast. Now, what's
Yeah.
cool in our business is that we deal in bullion, which is directly tied to the spot prices of the CME, but uh, graded rare coins, you get, yeah, they are metal, they are gold, they are copper, they are silver. But if you have a 1927 D St. Gaudens, that's a $700,000 coin. So gold
Jeez.
going up $2,000 doesn't really affect the price. You see what I'm saying? So you're insulated,
Right.
and that's what's I love about this business is that the products that we sell are benefiting from this rise. But let's say when, not if, but when prices do fall back somewhat, and maybe they won't, but let's say they do, you have a built-in hedge with that graded rare coin as opposed to just straight bullion where you are literally tied to directly to the swings in the market. So it's a great time, all and hopefully it will continue.
Yeah. I mean, that's, yeah. All markets are pretty much full steam ahead. But yeah, like you mentioned earlier, tokenization's a little slow on adoption, but that's good in comparison to now where precious metals just went insane. We've seen that with the prices, like, and like you mentioned, like the installation of prices that we have on our eBay was actually, is great because it worked out like how the market changed and it's still kind of like equated to that. So yeah, I see. Yeah, this pullback is healthy. We'll see what happens here. And yeah, this kind of ties into a question I have for Edwin about like assets in general when it comes to tokenization. So, what do you feel like are some of the asset classes are ready to be tokenized?
Yeah, so I mean, absolutely everything, but the underlying asset is the important thing. So people say, like, for example, real estate, but you don't tokenize real estate. You tokenize Yeah, we can obviously say like, okay, you can tokenize the ownership, but do you want a
Okay,
thousand
true.
persons being owner of the same flat or the same house? That would
Right.
be crazy. But
That's
you want the revenue. So if you can, I mean, usually people invest because they want profit, not because they want to be stuck into something that
no.
stays there, right?
Right.
So
Yeah.
I think I think debt is gonna be crucial this year in tokenization. Kind of like private credits, that's a sector that we are really much pushing. So any kind of debt is good, bonds or whatever. Um, I think equity is going to be slow. People are already testing tokenization of equity, but we have already a very huge market that moves around that. Kind of like secondaries of equity at the IPO level. It's already a very well established market. Now it's going to run 24/7 with Nasdaq going putting on change. So maybe that accelerate, but I think equity is still far off from normalization or standardization versus debt, like people having to finance themselves via issuance of debt or having to shoot a bond to do micro loans or all of these kind of like all of these different verticals. I
Right.
think this year we're gonna see a lot of that being issued.
Yeah, that's true. Yeah, that I've been excited about some of the democratized funding when it comes to tokenization. But yeah, it's kind of hard to see like the deed, the asset itself have tokenization attached to it. It's a little difficult, I would think, or at least
Super difficult. I mean,
uh,
they're doing it in Dubai. There's like, oh, now the registry you can have like all the owners appointed and it's true ownership. But then
yikes,
people forget about it. Like people got super excited. Oh, true tokenization is like, yeah, who's gonna manage that flat? Or
yikes, yeah.
is it like 1,000 people and they're gonna be like,
Thousand
are they
people.
gonna? Yeah, they're like, oh yeah, it got raised by 1,000 people, 1,000
That's so
owners of the
true.
same flat. And it's like you have companies with two founders hating each other, but
Uh,
1,000 owners of a meter square in a house in Dubai, they're all
oh,
gonna be friends because people are gonna try to use it because they own it. So there's a lot of things that I think they just went for the marketing stunt without realizing that some things are better managed. And if somebody says, I am the real estate promoter expert, give me the money, I'll do the things and give you back earnings, I think
right.
that's more likable than saying, hey, I'm gonna sell my flat. Now I have 900 partners on my flat, and we figure out how that works. Because who's gonna pay the appliances? Like I don't see people saying the plumber got down. Because what happened with the DAOs? It was like the same, kind of like two will take care, and the rest will be like, I just don't care anymore. And then decision making got slow and everything. I mean, I do believe in democracy, of course, but I
Yeah,
also believe that sometimes a management sort of or council or somebody
yeah,
had to step in and
exactly.
say like, okay, I'm getting the responsibility to take this abroad, because in a linear way then all that passes, we don't know.
Yeah, there's too many cooks in the kitchen. There's too many voices to make those decisions.
Exactly.
like, um,
Exactly.
yeah, I have the same thought, like I mentioned earlier. Yeah, some type of counsel to fast track those transactions, and have that mitigation, especially in traditional markets or asset or physical assets such as real estate. It's like um, if you have a buyer for that specific flat or apartment complex or house or anything, you want to make that decision as fast as possible. You don't want to have like
Absolutely.
sit on the sideline while the funding is not being able to be processed. And there's so many. So yeah, I know some people are building some real estate projects or they're a blockchain themselves. They do have some real estate in England. It seems promising, but there's a lot regulatory framework. Um, I know they're working with I think Mika and Vincent to
Oof.
figure out like what that looks like. Um, so they haven't released their token yet, and I know that's like the biggest thing. And like for you, let's get into the I guess BKN token. Like, how does that look like for you guys for like regulatory framework? Anything that you can mention. Of course, you don't have to mention everything, but
Of course.
what's that look like for any scrutiny or for anybody that wants to release a token that's based on tokenized assets?
Yeah, so we did a token. pre-MiCA. So now in Europe, we will have to be MiCA compliant. So you will have
Right.
to do all the things. But when we launched it, MiCA was about to begin, so we already prepared everything to be legal. So I did an ICO where I passed KYCs. That's crazy, right?
Yeah, that's great.
Yeah. So we did everything by the book, over the book,
Yeah.
because all of that taught us how to do it for tokenization. Because again, it was kind of like, okay, we have to prep up. If we want to tokenize things, we might as well learn the process. So our ICO was more about us the learning curve. And actually, a lot of the things we created, we embedded the know-how into our applications. So that was good. And at regulatory level, yeah, we went for the highest standard. So we right now we will have to be on MiCA, but I have zero doubts that if I wanted to issue our token today, we will be MiCA compliant just because we literally play everything by the book. And now it's just harder in the sense that ICOs in the back that you just shoot and nobody cares. Not even a company,
Yeah.
not even like docs. Like you don't even know what's that.
Yeah.
So a little bit of scrutiny was it's not bad. So now it's just harder. But Micah was first. We'll see. United States doing the same. In other countries are trying to do the same. So I think kind of like it's obviously it's slowing a little bit of maybe innovation because also all these ICOs they were innovating on so many things that it got crazy. Like the launch pads, the stakings, the community, the loyalties, the
Right.
like all of that started embedded with a lot of know-how because it was test and trial. Now compliance comes in, so we'll have to see a little bit of slowness, but also kind of like good because in the end you have to protect the little investor, which is us, the retail, who we really don't know where we invest there every day.
That's true.
Yeah.
Yeah, especially small investors, like they get the brute of decision making if if compliance is you know is overlooked when it comes to a lot of projects, and like you said, like ICOs, um, they have no repercussion. A lot of times they have no repercussions because they're
Oh,
not docs. There's a lot of misleading information. Um, and then, yeah, there's a lot of red tape when it comes to anything to compliance when it comes to tokenization. But yeah, it's great to hear that you've gone through those hoops. I've heard a lot of people, um, going through those hoops. Some of them hit some gatekeeping, some blockades, especially U.S. There's a lot of gray area now that Trump administration here's a little bit more accepting of digital assets. And everybody else kind of signaling that BlackRock. So we can see, some innovation happening, but now it is a little stifled. I agree. But yeah, it's definitely promising for sure.
yeah,
So
definitely.
so yeah, we're here. We got the last 10 minutes. We have some questions from the community going here. We got some questions for you. Or actually, it was a mention. I'm tokenizing yachts using Solana blockchain app. Well, I'm not trying to plug you in, but okay. Let's see. Which assets Brickken best position to tokenize today? Okay. Which assets classes is Brickken best position to tokenize today?
Yeah, so I mean, I this is gonna be everything. Yeah, we really create the concept that we create is, and I'm gonna put a similar right Shopify. If people would like to build their own e-commerce, they will create their own developers, their own website, their own kind of like payment funnel. They can create everything on their own,
Right.
or they can go to Shopify, get a great tooling box, and Shopify works for all the types of e-commerce. You can shoot shirts, you can shoot art,
Yeah.
you don't care. Us, we're the same. We are one huge tooling box. So you want to tokenize asset, gold, I don't know, a restaurant, a piece of it don't matter because my tooling box or our tooling box works like that because we're not specialized in something. Because in
Right.
reality, we just treat assets as they're assets or financial instruments. So we have worked on that kind of like one glove fits all, and certain specializations happen. So whatever you
That's
want.
yeah, that's super important. Why break what works? Integrate what's been working. Like in Shopify, we
Absolutely.
use Shopify for our website. It's just plug and play. I mean, the tools are out there, and then utilizing blockchain as well. There's no reason why not to use both, especially if the tools work. So yeah, I agree. Let's see. How is Bricken preparing for the next wave of institutional adoption?
Yeah, this is my
Good
last
question.
podcast with a T-shirt. I'm going in the next one with a suit, and then that's it.
That's it.
Uh, are we preparing? We're getting a bunch of licenses now. This year is it's gonna be a heavy load. We apply already to become a custodian here in Europe to manage digital assets, broker to start intermediating, some security wise. So we have ISOs coming up. In the end, now the heavy load is kind of like that. Our product is great. We have a lot of know how. We know what we're doing. Is that enough for an institution? Never. They will
Oh,
blast you with a questionnaire of 1,000. Where do you store my data? Who has access to it? And all of that, and it's beautiful for them, but it's a huge pain. And at the end, it's like, do you have a license for this? Do you have a license for that? So in the end, to play the game, technology is never enough. And this is why sometimes, like I'm like shocked with new startups. It's like, oh, I'm talking to BlackRock. It's like 1 month old startup, and it's like, it don't matter if you like the best technology because the risk officer or the compliance one, they're gonna kill it because they need to make sure that just by the fact of you being in that database takes such a big pain because they only like to deal not with the best, with the one that is the less risky.
yeah.
Something that I got to give you all a bit kind of like, because I work in on certain things like that. I understand like sometimes the best on win and not even the cheap is the less risky because when you enter into business with somebody and you're the blue chip or the heavy one, if something happens on the other one that can affect not that business, the
Mhm.
brand, the position. You see, many BlackRock goes to one of these kind of like, okay, yeah, the best technology. Something
Right.
happens, like a rock pool. Let's go like that. You know what happens over here in BlackRock? The LPs, the big money, they're like, oh, wait a second, BlackRock, I thought you were dealing with the best in security. They start getting unfunded.
Ugh.
So the only
Nice.
way you can chill with institutions, with banks, with asset managers, is you have to have top-notch compliance, top-notch
Mhm.
security,
True.
and then product. They might buy it or not, but sometimes this is not even the most important thing.
Yeah, that's such
Mhm.
true. Yeah, it's so true about institutional adoption when it comes to rug pulls, and a lot of these projects kind of come and go, and it makes scrutinized projects are actually building something that's actually significant. There's a lot of hiding behind not doxing the project and whatnot, and then it ruins it for people actually building things. And like we talked before we started the show was um, there's a lot of projects that don't actually build anything. They're not building any actual project. It's just the idea of tokenization and RWAs. There's chains. There's all this, and I can only maybe a handful of projects are actually building something. So definitely kudos to you to actually taking the time, really taking those steps, filling out compliance,
Thank you.
making sure that's very important. It gives kind of that kind of blueprint for others that actually want to build something that there actually is real adoption here. But
Yeah,
you have
I
to,
mean,
you know,
back in the day, you could create a marketplace of NFTs and nothing will happen because it's not a
right,
regulated situation. But
true.
when you're trying to bring like securities, health, I can think of a couple of verticals where
Oh,
like
right. I remember that.
the
Oh,
regulation is so heavy that you really need to pay attention to how you build it. Because I seen something like you like over this past year, I seen some startups being built on RWA, and it's like, mates, like it's not a technology game. This is what's wrong. The best product won't win. It's
uh-huh.
you have to comply with jurisdictions, KYCs, AML, issues of security. There's so much that you really need to know. But that's what I'm saying. There are verticals which is like, okay, everybody can try and succeed. There's other ones where the game is just slower, thus adoption, and then it's just like the moat is so huge that I don't know. I'm gonna see like a lot of hardware protocols or projects are gonna be built in the next 12 months without a doubt because the narrative is super high. And I would say 99% will fail. We'll see like 2 or 3 newcomers every year succeeding just because those are the ones who focus on having to build this with some licenses, legal knowledge, financial knowledge, kind of like. so much because in the end you're building on capital markets. It's ridiculous. Hint: I will never do this again. It's like I will go to somewhere super simple, one click, that's it. Kind of, I don't care because it's the burden is huge.
Yeah, it's a
Wow.
huge, a lot of gatekeeping. That's for sure.
Yeah,
Um, yeah, it's not for everyone. That's for sure. But it's definitely something to kind of see in fruition. There's a lot of value to add. There's a lot of there's a big TAM. The TAM is supposed to be 10 trillion by 2030. I don't think we're gonna hit that, but you know, sky's the limit.
not yet.
You know? But final question before we wrap up for the hour here. Brickken, or how does Brickken scale compliance across 160 jurisdictions?
Yeah, I was laughing at that because I'm gonna get my marketing team to not say that because that's the wrong statement. I was laughing on that, and I'm being super transparent. I like to be transparent with everybody because I was like, "What is that, guys?" Okay, so first of all, we're not compliant in 160. That's a mistake. The thing is, we're a software as a service. We
Uh,
provide the tools for a company to be able to issue securities on the jurisdiction of their choosing. So I don't know if I'm fully compliant, let's say in Mexico, because some things have to be done in person, such as submission of a prospectus or
right.
such as a legal agreement, which no platform in the world will ever solve. What you do is you comply with 80% of a lot, and the 20% is usually a manuality. So, can Brickken be compliant in 160 countries? Yes. Can they be used everywhere? Yes. The important thing is in the issuance of securities or real world assets, there's always a top that is on the client side, the company issuing, because Brickken does not issue securities. Brickken is a tooling box that allows the issuance of securities.
Mm,
So
okay.
rather be transparent than say like, oh yeah, we have the best legal team. We also have the best legal team, but better be transparent, right?
Yeah,
Yeah.
that's fair. Yeah, we can't say that. Yeah, I mean, 160. That's a huge feat, but yeah, I mean that's going to be difficult for most people. But yeah,
Yeah,
that's
no,
good.
if I had 160,
Uh,
I would be retired without internet in
like I'm
some
on an
private
island.
island because I solved securities worldwide. That would be, and then hopefully soon, hopefully soon.
All right, now wrapping up here, guys. Appreciate everyone being here. Plug in us right here. Call us 561 310 8341. Email us unicoins at gmail.com. Coinandcurrency.net. You check out all our products, eBay, American CC. We have all our inventory there. Give us a call if you don't see anything specific. John will be there, give you guys assistance. And here's myself here, Dustin Lee. I'm Crypto Hustler, head of social media at American Coin and Currency. John Beatty, ACC CEO, founder American Coin and Currency. Edwin Mata, CEO, founder Brickken. And any final words from you guys, John?
Final words, just enjoy the show. Let's see what happens next week.
Yeah, it's crazy times. Markets are everywhere.
Yeah.
A lot of value, a lot of money on the table. But yeah, it's exciting times for sure. So definitely stay
But
tuned.
I want to add to that real quick, Dustin.
Yeah.
Even if you think now that prices are high, right? Like, wow, I'm not going to spend $5,000 for an ounce of gold, even though it's a little more. Through experience, and I know most everyone has this experience, whether it's you bought a stock, whether you bought something, you know, you wish you would have bought more back then, right? We all have that. Looking back,
Right.
I wish I would have bought more. I wish I would have bought a ton more silver when it was at $16, you know.
Yeah.
But
16.
based off what's happening in the world and just if you did a T chart on pros and cons of why metals will be appreciating as opposed to uh, depreciating, the appreciation side has many more reasons why. So
Right.
even though gold's at 5,000, it goes to over time, anytime soon, but over time to 6,000, 7, 8, 9, maybe one day 10. Looking back, you'd be like, shit, I wish I would have bought a whole lot more back when it was at only $5,000. So keep that in mind too. That's probably my final thought.
For sure. Yeah. Stay hungry and yeah, keep your eye on the prize. Yeah, don't miss out on opportunity. Edwin Mata. So final words, what's Brickken doing? Maybe a little insight on future tokenization.
Yeah, we have a huge announcement next week, so I'm super happy about that because we've been delaying this announcement because we thought the market was going to be a little better this January, but now we just got to go to work. So follow us on Twitter. We have some cool announcements happening next week. So obviously it's a little bit of shit in the mind. And reality is like if you guys are interested in tokenization or anything around it, please do follow us. We do write a lot on the matter. We have a great technology. So if you guys are interested in tokenizing anything, please come up. We are super simple, a software as a service. We don't complicate things. So hopefully we can all tokenize. And lastly, to all investors, yeah, why don't you start investing in some tokenized assets? There's a lot out there. That's how the industry will grow. And basically, rentabilities right now on tokenized assets are quite high. We can find something between 9, 10, 15%, which for crypto guys is like, oh, no, that's not enough. It's a lot. 1 year, 50% value that. So yeah, test what is buying tokenized assets.
For sure. Yeah, check out Edwin Mata at Edwin_Mata, CEO, founder at Brickken. Get a hold of them on X, LinkedIn. Check out their website, brick.com. And yeah, we're gonna have our whole next month packed. First week we're just gonna be me and John, and then we're gonna have our panels as well as collectibles. Another guest coming on for the second week. If you would like to join us, Edwin, we're going to have a panel with other tokenization leaders.
Yes, please. Thank
so
you.
I'd love to have you on here. And yeah, check us out 1 p.m. Eastern, 10 a.m. Pacific every Thursday. Check us out as American Coin and Currency and tokenization scale, building institutional grade RWA infrastructure. See you guys on the next one. Have a great day. See you.
See you guys.
See you.